All right, so we've got our first transaction. Received cash from owner as initial investment. So now we've got all of our accounts across the top. You know, cash, supplies, AR, insurance. Then the other side of the equation, payable and owner's equity. So we received cash. So cash goes up. So remember, on our assets, all the increases are on the left side. So received cash, cash goes up. So we had $5,000 under there. So we received it from the owner. So it's going to be the owner's equity account. So we've got an increase in owner's equity account. And just remember, anything that happens on this side in debit or credit column is going to be in the opposite debit and credit column on the other side. So that way it keeps everything balanced. So all of our increases on this side go under credits. So we have a $5,000 credit for owner's equity. So then we've got our next transaction, paid cash for supplies. So our cash increase or decrease? Right, decrease. So we'll have decrease $400, decrease goes on the credit side. And our supplies, well, that's going to be our other account. We have an increase or decrease in supplies. Correct, increase. So that goes under the debit column. I'm trying to write these, I'm kind of writing them down a little bit. There's no lines on here. I'm kind of staggering them down some so that it shows. I'm going to go, because I needed to make 400. Thanks. Yeah, if I do something like that, be sure to catch me on it. Okay, so now we bought insurance on account for $700. So when we buy something on account, that's money that we're going to have to pay out eventually. So that's what our accounts payable. So you're going to make that connection. We got to pay the money out, payable. So we're going to have an increase in our accounts payable because now the amount that we owed went from, let's say, went from 0 to 700. So it increases, and all of our increases on the right side of the equation go on the credit column. So we have an increase on accounts payable. So we bought more insurance, or we bought insurance, so we have an increase in our insurance. So remember, everything I hear music, something should be off.
Hey, please put the paper over.
So music should be off, please. Okay, so we bought insurance. Our insurance goes up $700. Our increases are on the left side under debit. So all right, 700 there. I'll kind of try to do this. So we had an increase in our insurance and an increase in our accounts payable. Okay, now number 4, we bought supplies on account. So we bought supplies, so that means we've got increase or decrease of supplies. Right, increase. Everybody said increase. So our supplies go up, so our increases, remember, they go on the debit side for assets. So $300. We bought it on account. So that's more money that we're going to have to pay out. So we had another increase in our accounts payable. $300. So I'll draw another line. So now we sold services on account. So we sold services on account. So that's money that somebody has to pay us. So the money that somebody has to pay us is increasing by $200. So our accounts receivable, because that's money that we're supposed to receive in the future. So I'll put $200 here for our increase. And now our services, on the top layer of this, this is a sale for the company. So right now we're just going to put this in owner's equity. So we have an increase in owner's equity. Well, eventually we'll have a sales T-chart where this would go in, but that sales T-chart would count in the owner's equity column anyway. So our services, any kind of sale, goes to owner's equity. So now we've got received cash from owner as second investment. So that's just like number 1. So our cash goes up. And then our owner's equity goes up. That's a 6.
That's 3 zeros?
2 zeros. $600. Yeah, I know it's hard to see. And my writing's not that great sometimes. Okay, so that gets us to number 7. We paid cash for an accounts payable, so we paid some cash towards a bill. So our cash goes down. So our increases are on the left, our decreases are going to be on the right. So $100 there. And then we're also going to have a decrease for our accounts payable because the amount of money that we owe is going to go down. So remember, on this side of the equation, the increases are going to call the credit and decreases are in the debit. So we've got a decrease of $100. Our last one, received cash from accounts receivable. So, received cash. Cash goes up, so we've got an increase here. Oh, I wrote 500, should only be 50. Should only be 50 there, not 500. So the amount of money, remember, accounts receivable is the amount of money that people owe us, and somebody just paid on their bill, so the amount that they owe goes down. So say hypothetically, it was this same person that owed us $200, well, they had an increase from 0 to 200. Now they're going to have a decrease by 50. So the 50 is going to go over here on the credit side. I'll write a line there.
And so for all the assets column, it's always increase, decrease, and on the liability side, it's always decrease, increase.
Yeah, on assets, your increases go in the debit column, and on the liabilities, owner's equity, your increases go in the credit column. So hopefully your writing's better than mine, but you should be up to something like that. So I'm gonna take this a step further. Do one last thing here that's not on the sheet right now. This is all we're worried about for this part of it, for the test. For this one, this is all you'll need to do. But I'm gonna go a little bit more on this. So remember, so for cash, I'm gonna start with the cash column. So all of our increases are over here. So we've got 5,000 plus 600 because they're increases. So I'm gonna go ahead and total all this stuff. Oops. So 5,000 plus 600 plus 50. So our increases, we had $5,650 come in. But we also had decreases. Remember, over the course of this money got paid in. This money got paid out. So you can see we've got $500 here total. So I'm going to go ahead and subtract the $500 off of this. So technically the amount of cash that we have is $5,150. So now going over to our supplies, we had 2 increases in supplies. So that's a total of $700. We had no decreases. So I'll write 700 under here. And our accounts receivable, we received $250 was given credit for. So that comes off of what was owed. So the total amount that's owed to us now is $150. And then insurance, no changes here. We received $700. So no changes. Now I'm just going to do the same thing on the other side of the equal sign. We have our increases for accounts payable. So we owe $1,000, but then down here we paid $100 towards one of these bills. So 1,000 minus 100, $900. And then down here for owner's equity, these are all increases. So 600 plus 200, 800. Plus 5,000, so 5,800. So now we have both sides equal. So 900 plus 57. And it just kind of funnels down. So $6,700. So if I didn't mess up, which I could have, all 4 of these on the other side of the equal side should equal 67. So 5150 plus 700 plus 150 plus 700.
Excuse me. People return feedback.
So both of these equal $6,700. Like that. So I did everything right. Both sides are equal. So there's that one. So keep a hold of that.